120. We've seen these prices before. Just 2 years before, we were paying $129 on average on a monthly basis for 3 years before, or 4 years, 2022, when the Ukraine war broke out. It was $120, $130. We were paying $140 in 2008 or something, or seven. So there have been these spikes that have come in the past. We have seen them. And if you say there is a benefit, it has to be that this price of oil has to be this high for the next 1 or 2 years. And it's almost never happened. Prices of oil go up and then supply comes through, and these issues kind of change, and then we go back into the earlier pricing. So if it's a short-term dislocation, then any company may have a short-term problem, whether it is in the paints business, whether it's in the synthetic tires business, synthetic crude for rubber, so for the tires business, that have indirect impacts. Downstream, it could be logistics costs, even for materials companies, and those also can change over a period of time. But I don't think, unless this price remains this high for a really long period, even the government will be loath to change the petrol price you're paying at the pump, which means inflation may not look so bad and the impact may not look as bad for many of these sectors. So unless you're directly impacted or your raw materials are linked to crude, you're a plastics company or an airline whose significant cost is fuel, I think those are the companies that are directly affected. The rest of them are all downstream. Even the IT companies, you can say, will get affected if they have to, everybody else's costs go up because fuel costs go up, and therefore somewhere downstream there's an impact, but they are very low down on that impact. So I think apart from the companies that have direct impact on crude, plastics, airlines and so on, I would say most of the other companies are not directly impacted by it. But at an extreme, everybody is.
All right. So, but let's talk about also exporters, right? Amid the Middle East crisis, the government is taking appropriate steps to provide relief to Indian exporters. The Director General Foreign Trade Chief also highlighted in a press conference that the government has issued directions to the exporters in view of that crisis. Listen in.
इस स्कीम को सर हमने नाम दिया है रेजिलियंस एंड लॉजिस्टिक इंटरवेंशन फॉर एक्सपोर्ट फैसिलिटेशन. जैसे कि आपने बताया, ये स्कीम एक्सपोर्ट प्रमोशन मिशन के अंतर्गत एक फोकस्ड वे में टारगेटेड टाइम लिमिटेड इंटरवेंशन के रूप में हमने एक्सपोर्ट प्रमोशन मिशन में इसको इनिशिएट कर रहे हैं. इस स्कीम के 3 कंपोनेंट हैं. वी वुड लाइक टू ब्रीफ दैट देयर आर वेरी क्लियरली डिफाइंड 3 कंपोनेंट अंडर दिस स्कीम. One is the component which covers a period of 1 month, which was the month when the war started. This is primarily focused on already insured exporters, यानी कि जिन्होंने ECGC कवरेज पहले से लिया हुआ है. दूसरा कंपोनेंट इज फोकस्ड ऑन नेक्स्ट 3 months, यानी कि वह एक्सपोर्टर्स जो अब एक्सपोर्ट करना चाहते हैं, दे वांट टू डू इट विद मच बेटर पीस एट देयर लेवल. तो हम उनसे रिक्वेस्ट करेंगे कि वह उस पर्टिकुलर केस में ECGC कवरेज लें और उस रीजन में अपना एक्सपोर्ट कर सकें. और तीसरी स्कीम जो फोकस्ड है, जो जब वॉर ब्रेक हुई उसके समय पर जो हमारे मटेरियल जो हमारा ऑन ट्रांजिट था, उस मटेरियल में अगर उन्होंने ECGC कवरेज सपोर्ट, इंश्योरेंस प्रीमियम सपोर्ट नहीं लिया है, तो MSME फोकस्ड, आई वुड लाइक टू रिट्रेट MSME फोकस्ड, हम उनको कैसे एक एडिशनल सपोर्ट प्रोवाइड करें, यह पर्टिकुलर थर्ड कंपोनेंट भी हम हाईलाइट करेंगे.
All right. So these are all moving situations, and we'll keep you abreast of everything that you need to know. In the meanwhile, Chandan, as well as Deepak, thanks so much for taking the time today. Pleasure speaking with you as always, and hope things get better really soon for the markets and otherwise. We have to slip in a very quick break. There's lots to talk about, so don't go anywhere. We'll be back before you know it.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
We also have other board members, Mr. M.D. Ranganath, Mr. Santosh Kesavan, Mrs. Renu Karnad, Mrs. Lily Vadera, Mr. Sashi Jagdishan, Mr. Bhavesh Javeri, Mr. Kaizad Barucha, Mr. Srinivas Rangan, and anytime we are expecting Mr. Harsh Banbala, Mr. Sandeep Parikh, and Mrs. Sunita Maheshwari to join. The last three we should join soon, but we have the rest of the board members here. So without much ado, we'll hand it over to Mr. K.K. Mistry to get started. K.K., over to you. Thank you.
Srini, and good afternoon, members of the media. I'd like to address yesterday's developments regarding the resignation of Mr. Atanu Chakraborty as part-time chairman and independent director of HDFC Bank. The board accepted his resignation and appreciated his guidance and contributions during his tenure. And honestly, on behalf of the entire board, we would like to wish him the very best in his future endeavors. Some of you were able to join the analyst call this morning, but for those of you who were not able to, I'd like to address all of you now. On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there were no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. Mr. Chakraborty was asked by members of the board what issues he had, to which he responded that he had no particular issue. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, the depositors, our shareholders, and all our stakeholders is totally and completely unwavering. The disclosure made is complete and transparent in line with regulatory requirements. The board and the management oversaw the largest merger in recent years in India's corporate history. The merger's successful completion and continued results have not only boosted the bank's balance sheet, but also given it a stronger presence in key products and services. The merged entity continues to build on its shared values and realize the full potential of its market synergies. The board remains firmly committed to safeguarding institutional resilience and investor confidence. HDFC Bank board operates with strong governance standards, robust internal controls, and a very experienced management team who have been in the bank for a number of years and probably decades. Our strategic direction, business priorities, and execution capabilities continue to remain as always. The Reserve Bank of India has approved my appointment as the interim part-time chairman for a period of 3 years, and we are truly grateful for RBI's support and guidance at all times. Basis our periodical assessment, RBI has said that there are no material concerns on record as regards its conduct or governance. RBI has also stated that, and I'm quoting, sound financials, professionally run board, and competent management team. I would also like to say that the governance architecture that HDFC Bank has built over the decades is grounded in transparency, institutional integrity, and long-term value creation. We share strong value systems. I'm confident of camaraderie and collaboration between the executive management amongst themselves and the executive management with the board, so that all the goals and objectives of stakeholders are met in the best possible manner. HDFC Bank's culture is grounded in transparency, integrity, and long-term value creation. I remain confident of HDFC Bank's franchise. And I would also say that Shashi, Kaizad, Bhavesh, Rangan, the entire management team of the bank stands together and have been committed towards ensuring that the best standards of governance are always maintained in the bank. Lastly, for those of you who were not part of the analyst call this morning, I would like to reiterate what I said in the morning, that I would not personally have taken the responsibility if the bank's governance standards and ethos were not aligned with my values. And I truly believe that the bank adopts the best form of governance and ethics. So thank you very much. And Srini, now you can open the call for questions.
Okay, thank you, KK. Nirav, now can you please prepare the roster and Madhu, you can coordinate the queue, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. A request to all the participants, kindly limit yourself to 2 questions per participant and rejoin the queue for a follow-up question. The first question is from the line of Ritu Singh from CNBC TV 18. Please go ahead. Ritu ma'am, sorry to interrupt you, but you're not audible. Hello, Ritu ma'am, can you hear us? Ladies and gentlemen, we lost the line for the...
Okay, we'll get you all of the details of what's happening there. Same story, nothing really has changed. Meanwhile, as far as HDFC Bank is concerned, what has changed dramatically is 23,000 has been lost on the Nifty. I mean, it's just a... It's a free fall at this point. There's just no gravity which is saving the Nifty at this point. I want to get Chandan in. I wonder if you still have Deepak with us. But Chandan, I just want to understand from you where we can find now the next move and some kind of support. In fact, I'm going to take that question with Avinash Gorakshakar as well and ask him what he thinks is a redeeming feature for the markets. Avinash, just very quickly, anything to save the situation right now?
I think, Tamanna, as you said, it's a free fall. And I think in this kind of market, it's very difficult to qualify as to where the markets would settle down. But 23,000 getting broken is definitely not a good sign. I think this was a level which was being monitored for a very long time. If we don't regain 23,000 on the closing today, then I think a further fall definitely can be expected. So I think you have got to just wait and watch. I think in this free fall, it's very difficult to visualize what level the markets could actually finally settle down and what kind of geopolitical developments happen in the next few weeks, at least on the weekend. So I think just wait and watch. We can't do anything more about it.
Expiry also playing out today, of course. Is that what is causing the elevated pressure on the downside, or is it more widespread? Obviously, it is widespread, Amit, but what are the reasons technically that you would ascribe to the kind of drop that we're seeing right now? It's not just one falling knife at this point, it's many.
I mean, good afternoon and thank you for having me here, Alex. It's not a great afternoon, but wish everybody a very happy Gudi Padwa from our side. It's actually a domino effect. If you look at
before you do that, let us also, Tamanna and I and the entire team, extend our best wishes, not just for Gudi Padwa. Of course, we have people in the country celebrating Ugadi as well, and it's a very beautiful, colorful celebration.
It's an auspicious change of season, new year. Let's hope for new starts as well, even as we do that. So, wishing everyone better luck and joy. Best to buy gold today, Amit. It's traditionally people buy gold. So, looking at what's happening right now.
No,
Amit, you've gone. There you are.
Yeah, hi. Can you hear me?
Now I can.
Yeah. So what I was saying is sometimes, I mean, if I have to really play against my own ethos, I would say sometimes FD looks to be the greatest option. Look at the way the markets are falling. But on a lighter note, the way the markets are falling, it actually presents an opportunity from a long-term investment perspective to, start accumulating a little bit in quality stocks. The impact of HDFC Bank has had a very strong domino impact on the overall market. I mean, as you've been discussing during the entire day, why Shriram Finance falling more than HDFC Bank when there is nothing untoward happening in that counter. So there are certain counters which are seeing a very sharp fall, and one needs to be a little picky, a little patient. But I think it's the darkest before the dawn, and things should look up very soon. If you look at the seasonality of the markets, technically speaking, April, May, and June have been more positive months. We have had more positive Aprils and Mays and Junes in the entire history of our markets. as compared to negative months. So I do see that hopefully we should be bottoming out. I mean, last 3 days move was looking like it was a bottom, but today's unpleasant surprise notwithstanding, the bottom should be close by, and we should start looking at accumulating from a more medium-term perspective.
Okay. Individual stocks then, Amit, in this context, it's difficult to pick, right? So therefore, would you wait on the sidelines or would you venture out and buy some things?
I mean, I would wait on the sidelines, but if I had to really look at, parking my funds and have to have an equity exposure, then the defensive or the value place would be the place where I would be parking my funds. And rather than stocks, I would be looking at more broader indices like healthcare, pharma, are the places where I would be, looking to park some of my funds over there. And instead of individual stocks, it would be more sector and thematic specific through a MF or something on those lines.
Okay, so pharma may be one of the places to hide. I like that Amit has brought some optimism to the conversation right now. The problem is that we've been through this cycle now so many times in the last few days that it's getting a little difficult to understand where this is ending. Avinash, a few days ago, the question was whether this would spread beyond the confines of the countries that are participating right now. Once it was clear that NATO, etc., are not joining this, it seemed like we were safer. But the fact that oil refineries, gas sites, gas fields are being attacked left, right and center, does this mean that we might see pain which is prolonged for some point? Would you look at an HPCL, BPCL in IOC in any form or fashion right now? And if you hold it, what would you do?
No, I think, Tamanna, fresh buying, we have been telling our clients to avoid, specifically the oil marketing companies. And I think, how bad the situation would get would depend on how long this war drags on. So, I think, next 3 to 4 weeks, if this war continues in the same momentum, then I think it's going to be painful for the Indian economy. I think gas prices have also gone up. We have just read that in Europe, gas prices have shot up. Oil has also crossed around $112 to $113 a barrel. Plus the rupee has now crossed over 93 rupees. So, these are obviously factors which are going to keep the markets depressed for some more time, unless we see some macro changes in these factors happening. And plus, today would be an interesting day today to see what is the amount of selling which has come from the FIs. FIs have been selling left and right. So today's number would be very important to watch, and what are the domestic mutual funds doing? Because today being a very big drawdown day, one will like to see these numbers. So I think, clearly fresh buying at this level is definitely not advisable. It's better to wait and watch. I think let the market settle down. I think there's no hurry. Entry points can definitely be made at a later point of time. So, in these kind of volatile markets, when everything is confusing and, which is not improving, it's better to stay put and just observe the markets for some time.
Okay, couple of things happening right now, including a briefing on the Middle East crisis by the government. We've had some of those details coming in. We have HDFC Bank, which is holding a media conference, and we're covering what's happening in the Middle East. So we've got our attention in several places trying to understand what's the biggest factor in markets right now. As of this moment, we're looking at the energy crisis, which is flaring up. And, we've been reporting through the day about how X oil field and Y gas field has been the target of a latest attack. But how much of that is what makes its way to India? Amit Sarkar with those special details. So Amit, if I had to look at it from the perspective of Indian imports, how much of the source of India's LPG is on fire right now?
On the LNG side, if you look at India's total LNG consumption stands at close to 54.4 million metric ton. And out of this, nearly 26.5 million metric ton is something that we import. That is nearly 50% is what the import is coming in. Now, out of this 26.5 million metric ton, 60% is something that we get from Qatar and UAE. Now, which means that Qatar and UAE form nearly 29% of India's total LNG consumption. So that's a big number that is coming in. Because of the recent attacks that have happened, this will get impacted and the issue could remain prolonged for a few more months going forward. Now, what analysts are saying because of this is that irrespective of whether Strait of Hormuz opens or not, LNG supply will continue to remain impacted because it will take time to again start these new fields and refineries which have been impacted because of the war, and analysts believe that the lower gas supply or gas supply resumption or the lower gas prices is something that we will see only by the end of 2026 or in the first half of 2027. Now earlier the assumption was that gas prices would remain on the lower side throughout 2026 and 2027, but this has now shifted, and lower gas prices, that is around $10 from current prices of around $20 that we are seeing currently in the Asian market, this will lower only by the end of 2026. Now, which are the sectors which our companies are stand to get impacted? Petro and LNG, the biggest impact, because nearly 60% of the volume are coming in from here to the Dahej LNG terminal. Apart from that, GAIL, because transmission segment would get impacted, marketing volumes would also get impacted. City gas distribution companies, IGL, MGL and Gujarat Gas, for them procuring gas will be quite expensive from the spot market. Fertilizer company, because nearly 85% of the gas requirement is met via imports. But apart from this, a host of other sectors that see a secondary impact, and they have been announcing about the same of late. Auto companies, auto ancillaries, QSR companies, cement, consumer, ceramic and EMS companies also stand to get impacted because of the LNG shortage, which is now expected to be prolonged going forward.
Yeah, right. Right. Thanks so much for laying that out for us, Soumit. In fact, let's talk about this in more detail. We're joined by Mr. M.K. Surana, who's former Chairman and Managing Director of HPCL. Mr. Surana, thanks so much for taking the time. The question to you, and you've seen conflicts in the past, but what we're seeing right now, at least to us, and we don't really understand oil infrastructure as well as you do, it seems like it's much more destructive, and that's why there is worry, as my colleague Soumit was just pointing out, that the fallout could take much longer to resolve than before. Can you explain to us from your lens, as somebody that understands how crude supply chains work, how bad is it right now?
Good afternoon, Alex, and thanks for having me on your show. So if you see last 20 days of war, so I see there are three stages, or there are different stages. In the first stage, when the people were thinking that it will be a quick and decisive war, short-lived, the state of Hormuz will not be blocked, the oil infrastructure will not be attacked, and during that time, in spite of the war, the crude prices hovered below 85. Then when it became clear that it is not that quick and is not in the visible, the objectives are shifting a bit, and the state of Hormuz was practically blocked, the oil crossed $100 mark. Now, yesterday, in last 24 hours, there is a new factor which has come in. So far, the assumption was that the attack on the oil infrastructure of the neighboring countries is more a collateral, or to prove a point, or to create a pressure point, or maybe accidental. But since yesterday, the way it appears is that oil infrastructure is being targeted deliberately and to cause the maximum damage to the other side. And this brings in another element in the whole situation, because the earlier assumption was that once the war gets over, or if the supply through Strait of Hormuz starts through diplomatic means or otherwise, the oil supply or the gas supply situation will get normalized quickly. And during that time, people will be able to manage through the reserves and the release by IEA and other means. But when the oil infrastructure gets attacked, the problem is that it depends on how much the damage is and how long the war goes. But then you will need time to repair that, and some of the facilities may have the permanent or temporary outages. And that brings in another factor, and that is what is getting factored in the oil prices today, which has taken it, I think, since till the time I saw last, it was around $116. So the way it appears now, that now we can see two ways. It is a developing scenario. You may assume that it may come quickly and it may go longer also, but it can be seen in two ways. Either it is the last phase of the war, where everybody is trying to put the maximum pressure to cause the maximum damage to the other side, or make the maximum pressure to have honorable exit, or there is a persistence to drag it till the last. Now, it will depend on how the situation develops, and the oil prices will reflect that. But one thing, there is no doubt, the longer it goes, the cost on the economy will be disproportionately higher the longer it goes.
Mr. Surana, what is India's tolerance threshold? for gas as well as for crude. At crude, we're at 116. More worrying seems to be gas. In your assessment, how much of the LNG that we import is on fire right now?
So I think I was just sharing that total LNG, let's say we import around 54 million ton and 50% is domestic, 50% is imported.
Okay.
And out of the imported, around 60% was coming from the countries which are affected by the Strait of Hormuz. Now the government has done the repurposing to prioritize the sectors, to reduce the thing where it is not supposed to go or there is possible. But the supply, especially after some of the oil infrastructures are getting attacked, that brings a new element in the picture. And because LNG was also acting as a substitute for LPG, so if LNG facilities get impacted, then it does create a stress on the LPG.
Mr. Surana, let me just rephrase my question. We're talking about how much comes from the Strait of Hormuz. That was a traffic jam in that sense. The way to bring in LNG was blocked. Here, the source has been attacked. So one can assume if key infrastructure has been damaged, and we still don't know the extent to which, it will take even more time to come online or come back in the same force.
So last one which is been attacked, it produces around, it handles around 77 to 80 metric ton of MTPA of gas.
So
okay? It's almost 20% of the LNG.
Okay. So
it depends on how much is the damage and which facilities have got damaged. That will depend on how much time it takes to come.
So it's fair to assume this is not something that can be fixed easy. If we had found a fix as a nation to at least some of those ships coming through the Strait of Hormuz through our diplomatic channels, that was one thing. We were beginning to do that. But here, if the source itself is under stress, then it's a different story altogether. What could that do to India's energy picture? Are there alternatives that are available?
Yes, there are alternatives in the sense that LNG you can get from US, you can get from Australia, you can get from Russia. There are other countries which can supply you LNG. So only thing is the time to come will be longer. That's one part, and the freight will be the cost. But right now, I think the important is to figure out the supplies rather than the price. And price can be handled, of course, in a different way. So there are resources available for LNG in the world. America itself is a big source of LNG supplies. Earlier, they had a constraint on the export facilities, but that also has been streamlined over the last 1-2 years.
Yeah.
So there are sources available for LNG in the world.
Sir, I just want to understand, and I think it's good signs that there are sources available, but there is such disruption to maritime routes, and this is ultimately how it is transported. And so from that perspective, what kind of lead time would be required for the government to arrange for these alternative sources to come through?
No, in fact, the LNG was coming from US otherwise also.
Okay.
Now, it depends on the time which it comes, the inventory which you have, and the next sources which come, because you have to definitely step up the supplies from the other sources, which otherwise would have been coming from the Middle East sources. And Qatar and UAE had been one major source of the supplies. That is one way. And the second thing is we need to see the alternatives, which government is already looking at it. In terms of usage, repurposing it, using the alternate sources of energy. One good thing for India is that in the power supply position, there is substantial part of renewable which has come. Otherwise, the stress would have been even greater.
Got it. Mr. Surana, thanks so much as always for taking the time. Really appreciate that you come to explain this to us and our viewers. Thanks so much for taking the time.
Thank you so much.
All right. Let me go back to Avinash on this question, which is that, okay, things are seeming a little bad right now. I mean, more than a little bad, because you have 23,000 that's been broken, the Nifty 50. The broader market's also losing ground. From a fundamental perspective, Avinash, would you hazard a guess, and not hazard a guess, but would you use a strategy to go on and buy the dip right now? Because it's always dangerous. People have done that through the crisis so far, and it's not really proven its worth just yet. So would you hold your horses? Would you wait on the sidelines, or would you go out and buy right now?
No, Alex, I think if I were to buy, I would buy largely the domestic facing sectors, not sectors which are, anyway having any kind of connectivity with the crude or typically with the, export oriented kind of, rupee kind of issue. So I think, domestic sectors like infrastructure, capital goods, hotels, hospitals, these could be good pockets where you could get good value. Companies like Apollo Hospital, Yatharth Hospital, pharma companies, these could be good defensive bets in this kind of market. But I think the broad sense in the market is that once 23,000 gets broken, there could be another wave of selling. And I think as everyone is aware, we really don't know how long this war will continue. Another 2, 3, 4 weeks if this war continues, which I think it looks possible, then I think it's going to be definitely a bad period for the first quarter of next financial year. That is April to June. The January to March numbers may not be impacted, but I think corporate earnings also could get impacted. And that's probably the reason why, Alex, you're seeing banking also getting hammered, largely because banks are fearing that possibly their asset quality on the books could also get a little more deteriorated. So I think, you need to be a little careful. Even if you need to invest in this market, Alex, it's better that you don't use all your ammunition at the same time. Maybe you do a small, piecemeal approach and wait for the markets to settle down. That's the only way we can look at it.
From a very short-term perspective, and Amit, the question normally around this time is BTST. But what strategy would you employ today?
So if I have to stick my neck out and give a call on a stock, then I would say I would actually look for pockets of strength or relative strength here, because in this kind of a free fall market, there are certain pockets, like for example, NetWeb Technologies. Fundamentally, it is a very expensive stock, with P's in triple digits and all that. But if you look at the stock's price action, it has not really given away. And it is holding the 3,000 level quite smartly. So from a swing perspective, one could, look at accumulating a little bit of NetWeb, keeping a stop loss below 3,000 levels for possible targets of about 3,600 and 3,800. This is purely from a relative strength perspective and not really a BTST sort of a call.
Okay, I don't blame you. Tough to call a BTST. I mean, even if you see some kind of a technical improvement tomorrow, it's not one where there can be any kind of certainty, that's for sure. Though there is an important development tomorrow. After Ozempic's patent expiry in India on the 20th of March, the country's GLP-1 drug market is set for rapid expansion, driven by the entry of 50-plus branded generics from domestic pharma companies with intensifying competition and accelerating volume-led growth. What is this big shift and how is it going to impact the pharma sector? Varsha joining in with more.
Well, one of the hottest drug, that is semaglutide, the patent of this drug is going to expire tomorrow, that is 20th March. Now, what is semaglutide? Is nothing but a active ingredient which is used in Ozempic. Now, this is used in diabetes plus weight loss, and this will open the market for to 50 plus Indian pharma companies. And if you see, GLP is one of the fastest growing segments globally. Talking about some of the history and of course semaglutide, which is manufactured by Novo Nordisk. If you see, they have 3 brands: Ozempic, Wegovy and Rybelsus. Now the semaglutide patent is going to expire on 20th March 2026. What does this mean? That 50 plus Indian companies will launch generics, price will drop sharply around 50 to 60% and demand is expected to surge. Talking about the other GLP-1 drugs also, you have liraglutide, wherein this is manufactured by Novo Nordisk. Generics are already in line. For example, Biocon has started with liraglutide. You have dulaglutide. Again, Eli Lilly is the innovator. Generics, not yet. Depends on the patent expiry. You have tirzepatide, which is manufactured by Eli Lilly. Mounjaro and Zepbound are some of the brands. Generics are far away considering this is the latest drug. Talking about what does this mean? This means that No sudden price drop, innovators continue to dominate, and gradual opportunity for Indian players when it comes to other GLP drugs. Now, talking about who will benefit, the big beneficiaries when it comes to GLP-1 in Indian markets, you have the likes of Dr. Reddy, Sun Pharma, Biocon, Lupin. Every other pharma company will be launching the generics of semaglutide. Now, also the API manufacturers, the CDMO companies like Divi's, OneSource will also be beneficial of this. Distributors and retail pharma networks will also be benefited from the GLP-1. Lastly, if I were to talk about the market size opportunity, it's growing rapidly globally. When it comes to the US GLP weight loss market, stand at around $127 million as of December 2025. Lastly, the very important one when it comes to Indians is the price sensitivity. If you see the innovator price, the main drug costs around 15,000 to 25,000 per month. But after generics come in, this is expected to drop, the price is expected to drop 50 to 60%. That is only 5,000 rupees weekly. So overall, considering the hottest drug when it comes to Indian markets, this will be a volume game for generics company and not a margin one. But yes, certainly, everyone is so excited because this is the next growth driver when it comes to the pharma companies.
Thank you for that, Varsha. And if you're looking for, I would say, defensive plays of safer kind of stories or investment ideas, would pharmaceuticals be one of them? I want to come to Avinash with that question. Tomorrow is actually a big day for the Indian pharmaceutical industry. Is that a play that you would be interested in looking at right now, Avinash, notwithstanding what's on the screen?
Yeah, I think, companies like Divi's Laboratories, typically something like Sun Pharma or maybe a Biocon, I think these could definitely be good bets. In fact, in a market like this, you could probably get these companies also at lower levels, and that definitely would play off in the near term. So yes, pharma is definitely a defensive space. And I think even the hospital space, Tamanna, as I was mentioning you earlier, this is a very steady compounding kind of space. Companies like Apollo, companies like Yathar Hospital, the hospital space is something which is growing quite rapidly. So this could be another area where possibly, the investors could see some amount of protection and where capital could grow at a decent pace. So, in this kind of market, it's better to play on something which is, more mature and going at a steady pace. I think, obviously the upstream companies like ONGC, companies like Coal India, even companies like ITC, these could also figure into the list. But I think you need to take a slightly longer term call because in this market, fundamentals are completely being ignored. I think the markets are purely driven by the geopolitical scenario.
Okay, talking about the geopolitical scenario, something very, very important on your screen right now, and we have to address it. All your updates coming in on NDTV Profit down there on the Middle East war updates. And from Bloomberg, Iran is saying they're working on a law to charge ships for Hormuz passage. Now, this is, it also makes sense, Alex, why there is so much of panic. I want to check the price of Brent if we can right now, US futures as well. Indian markets, I think there is just so much beating that any market can take, and Indian markets have taken a bulk of it. But you're going to see a deeper cut if this continues. This was a question that we've been asking. Has the Strait of Hormuz and the passage through it, the dynamics of that, changed forever after the events of the last 3 weeks? Because once Iran has realized that strangling the Strait of Hormuz gives it the kind of leverage which far outpaces its size, its power, its military operations, and its capabilities, why are they going to let go?
That's a fair point, at least in the short term, Tamanna. And I think that while this is something I think that if this leads to a cessation of the violence and a cessation of the targeting of oil infrastructure, at least in the short term, of course, it depends on what the cost is, but one would take this. And so, irrespective of what happens in the near term, though, I think the longer term question is, will the producers of oil, which is the Gulf states, be okay with that kind of a status quo, or will an alternative be created for this kind of a situation?
What is the alternative? You're the person standing there. Okay, it's a very maybe a bit of a stretch of an example, but sometimes when you drive out, you take these, if you are doing a road trip and you pass these little villages, little towns, you will have the local boys who are standing at the entrance to that space and asking you for a toll for anyone who's outside. They're saying, you're not from our area, to pass through, you need to give a toll. They're not licensed by anyone. You don't know where that collection goes. There is no accountability, but you pay it because, you need to get through. That's the only route. If someone has control of the Strait of Hormuz, are they going to let go?
Tamanna, there's an even older story, and this is as old as time, as long as bridges have existed. There's a story about the troll under the bridge. The troll under the bridge seeks money for passage, right? Yeah. What happens to the troll at the end of the story?
No, I don't know if Iran is the troll, and if you want to do that comparison, because we're not taking any sides over here. Sure. But having said that, you have 12 nations, and these are Arab nations that have come together and asked Iran to stop bombarding their infrastructure and all of their installations, whether it's desalination, whether it's oil. Okay, you have the market close over there, but frankly, if the market closes 500 points down or 700 points down, beyond the point, it's the same extent of pain. The marginal pain is exactly the same. The tick you have to look at is Brent. The advanced decline ratio, dismal. The Nifty 50 close, really, you can feel happy it's not below 23,000, but it's seriously as bad as it can get. Bank Nifty in its own world of pain. I want to pull up Shriram Finance. For some reason, Shriram Finance is
7% down.
Is getting hit even more than an HDFC Bank, one of the top losers on the NSE 500 as well. Nearly 7% down on Shriram Finance. And just to say, HDFC Bank followed a pattern of getting hit day after day after day before this news comes out. So I don't know why Shriram Finance is getting that kind of pain. The Nifty heat map will show you everything in the red. Maybe an ONGC will be in the green. Perhaps an ONGC will be in the green. I don't know if that really matters in the middle of everything that's happening. The sectoral heat map will also show you a lot of pain there. Look at Shriram Finance, top loser, Eternal, HDFC Bank, okay, this is a different story. Bajaj Financial, the fact that all of your BFSI, PAC and your big ones are seeing this kind of pain after what's happening in HDFC Bank is telling me it's not as easy as saying that this is a problem between X and Y.
Yeah.
And they had an issue with each other and they walked out, because what HDFC Bank is telling us today is that move on, there's nothing here to see.
Sure.
That's not what the screen is showing.
It isn't. And beyond that also, the other sad part is that you saw just a brief respite to the selling for 3 days, and that's been completely wiped out. It's like an ice cube in summer. It's melted completely. It's gone. But of course, we're going to take this forward over the course of this evening. There's HDFC Bank to talk about. There's geopolitics. There is everything that is emerging from the Middle East. You'll find all of the updates on the bottom of your screen and on live coverage through the day. But from Tamanna and myself and the team that put the show together, thank you so much for watching. Do stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have fared today. So markets have snapped out of its 3-day gaining streak with benchmarks losing over 3%. All the sectors have closed lower with auto as the top loser. Broader markets also reflects the fall in the benchmarks. And one stock that's been firmly in focus today is HDFC Bank after a sudden top-level exit. Now, HDFC Bank shares have tumbled after Chairman Atanu Chakraborty has stepped down, citing ethical concerns, sparking worries around the governance and also leadership stability. However, the RBI has stepped in with reassurance, stating that there are no material concerns on the governance, liquidity or capital adequacy, and also has approached the transition plan. Now, the street will now closely watch clarity on the leadership continuity and also the internal alignment. And the brokerage commentary on HDFC Bank continues to evolve with mixed signals coming in. Citi is maintaining its buy rating on the HDFC Bank with a target price of 1,200 rupees, but flags a near-term overhang. The brokerage says that investor focus is now shifting to management continuity with MD and CEO's reappointment due in October 2026. And while uncertainty may weigh in for the short term, Citi expects operating performance to remain steady with core metrics continuing to improve over the medium term. In fact, HDFC Bank is also seeing a shift in brokerage stance with Macquarie removing the stock from its marquee buy list. And this move signals a more cautious near-term view even as the bank remains a key player in the sector. While fundamentals may stay intact, the change could impact the sentiment in the near term. Investors will now watch for clarity on growth and also performance trends. In fact, Kotak Securities is maintaining a buy on HDFC Bank with the target price of 1,050 rupees, but also flags rising uncertainty around the leadership. Now, the brokerage notes that chairman's exit and also interim structure could really delay the recovery and also keep the sentiment subdued. While valuations have already corrected and appear inexpensive, Kotak remains cautious on any sort of near-term re-rating, and it says that a meaningful upside will depend on the clearer visibility and also more stable news flow. And whereas Brent crude is surging sharply, climbing to around $115 a barrel as tensions in the Middle East hit critical energy infrastructure, and the spike reflects growing fears of supply disruptions in a region vital to global oil markets. And traders are reacting to heightened geopolitical risk with volatility expected to remain elevated. And this move could also have wider implications for inflation and also fuel prices globally. And oil marketing companies are under pressure as crude prices surge sharply. Shares of HPCL, IOCL and BPCL have fallen as much as 6%, tracking the spike in Brent crude to around $115 per barrel. And higher crude raises concerns over marketing margins and also potential losses for the OMCs. The sharp move is weighing on the sentiment across the energy pack. In fact, shares of Bikaji Foods are likely to remain in focus after brokerage firm Systematics Group initiated coverage on the stock with a buy rating. And the brokerage has set a target price of 750 rupees, implying an upside potential of around 22% from current levels. The stock had settled at 618 rupees in the previous session. Systematics remain optimistic on the company's growth outlook, highlighting its strong positioning in the ethnic snacks segment. It has also pointed to Bikaji's successful expansion into adjacent categories like sweets and Western snacks, which could further drive growth going ahead. Meanwhile, institutional activity is also picking up in the new age companies, urban companies in focus after SBI Mutual Fund has picked up a 4.14% stake in the company, acquiring over 6 crore shares, and this marks a notable institutional endorsement for the new age services platform. Such investments signal growing confidence in the scalable digital-first business models, especially in the consumer services space. And staying with the infrastructure, there's strong order flow momentum coming in. Shares of Hindustan Construction Company were in focus after the company secured a significant infrastructure contract valued at approximately 1,662 crores from Brihan Mumbai Municipal Corporation, that is the BMC, for construction of Goregaon Mulund Link Road Phase 4. So the project has been awarded to Akshaya HCC joint venture, which is in in which HCC holds about 49% stake. So this order win comes as a positive trigger for HCC, reinforcing its position in the infrastructure and also construction space. First, shares of Butterfly, Gandhimati Appliances and also Stovecraft will be in focus after, a sharp rally of up to 14% was seen even as broader markets remain under pressure today. The surge comes amid a spike in demand for induction cooktops and also electric cooking appliances driven by concerns over LPG supply disruptions linked to the ongoing Middle East tensions. And with households and commercial users increasingly turning to alternatives, companies in the kitchen appliance segment are seeing a strong demand uptick. And this shift in the consumer behavior is now translating into the investor interest, making these stocks key ones to watch. And Bharat Coking Coal is in focus after reporting a record operational milestone. The company has achieved its highest ever single-day coal booking, clocking 2.36 lakh tons in just one day. Now, the strong performance underscores robust demand for coal and improved dispatch efficiency at the company. So, the milestone is also seen as a positive indicator for the broader coal sector, reflecting steady consumption trends and also operational momentum. Let's look at some brokerage notes now. Citi is upgrading Dr. Lal Path Labs to a buy and also raising the target price to 1,650 rupees, citing improving industry dynamics and also steady growth visibility. The brokerage expects double-digit revenue growth supported by expansion into smaller towns and also a better product mix. Margins are likely to stay strong, backed by operating leverage and also cost efficiencies. Citi also highlights a strong balance sheet but flags volumes slow down as a key risk. And according to sources, India's export numbers for March are likely to come in slightly lower than last year, with the dip attributed to global geopolitical disruptions, including the ongoing Middle East conflict. Now, the government is working on the additional support measures for exporters, especially in areas linked to finance and banking. And on the trade diplomacy front, sources have said that India-UK free trade agreement could enter into force by April end or early May, while the India-EU FTA is likely to be ratified by November end. So, however, the turmoil in the West Asia has pushed back at other negotiations, with talks on GCC and also Israel FTAs delayed. The Oman FTA's entry into force may also be pushed back due to the current disruptions. And Commerce Minister Piyush Goyal, along with the Commerce Secretary, will lead India's delegation to the WTO's 14th Ministerial Conference in Yaoundé, Cameroon, scheduled from March 24 to 29. Sources are telling NDTV Profit.
All right, Mr. Shashidhar Jagdishan, the CEO of HDFC Bank, sir. I missed talking to you during the con call of media briefing. My first question to you is, how do you see this entire turn of events that have panned out and the impact on bank? All right, we are trying Mr. Jagdishan again, and we were discussing with him the entire turn of events that have really taken place at HDFC Bank, and in a long briefing to media, they have dismissed all the claims of any issues that really surround the HDFC Bank with respect to the relationship of the chairperson of the bank who has now resigned, and Keki Misri has come in as the interim chairman of the board of HDFC Bank. In fact, Shashidhar Jagdishan's tenure also ends in October of this year, and therefore the briefing also stated that NRC meeting will really take up and consider the matter of his reappointment as of October. Very soon is what's the word coming in. But remember that most of the brokerages have really stated that the concerns remain when it comes to the questions about the governance, and nobody is aware of the concerns because of which the chairman of the board had to really resign, and also cast a shadow on the ethics as well as the values of the bank. So that is the question that the market is really looking at deciphering. So, Mr. Shashidhar, can you hear me, sir? All right, Himakshi, take it forward while we patch this line.
Yes, Nisha. So, you know, as you were about to speak to him, staying, you know, so HDFC, this whole shake-up that has, you know, come in about after the news coming in of the stepping down. So I would want you to just, you know, tell our viewers about the background of it and what's the roadmap ahead.
All right. So with this particular resignation, it brings to an end a long-standing dispute which a lot of us corporate reporters have been aware of, the concerns that were there in terms of both the company's CEO, management, as well as also the chairperson. And those probably is really highlighted. And those concerns have been dismissed by the board and the new chairman of HDFC Bank's board. So at this particular moment, what we see is that RBI has already allayed fears of any concerns regarding the bank. Keki Mistry has come in as interim chairperson for 3 months, and probably his reappointment will be watched out closely. With that, we'll slip into a short breather on the show. Come back for more news and views on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro Am, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Welcome back, viewers. Now, here's an exclusive clip for my colleague Neeraj Shah's conversation with the ValueQuest's Ravi Dharamshi, where they talk about investing amid volatility and also the effect of the geopolitical risk on the domestic exporters. Let's listen in to that conversation.
Well, we are at Vantage, the annual investor day of ValueQuest. And it's been 15 years since they've been doing this, or 15 years of their existence, if you will. And I'm deeply, deeply happy to be talking to Ravi Dharamshi, founder of ValueQuest. Of course, needs no introduction. Ravi, great having you. And thank you so much for having us here.
Thank you, Neeraj. Happy to be here.
Yeah. Well, are these happy times to be doing this? Because I know public markets are actually fraught with a lot of risk. So it must have been quite something to pull off a private market event, get investors in and try and talk to them about investing risk capital. But what's your, and I'll come to that also, what's your general belief right now about how the investing sentiment currently in light of what's happening?
So it would be, one cannot say happy times for sure. And not only in the sense of from the investor's perspective, but just humanitarian crisis that is panning out. There are there's Pakistan-Afghanistan war going on, there's Russia-Ukraine war going on, and then now there is Iran-Israel war. So definitely not happy times. But see, from the perspective of capital markets, yes, this is their war, but it is our problem because it is leading to increasing energy cost. It is leading to supply chain disruptions, and we are heavily dependent on both of those. So it is definitely our problem, and markets are rightly reacting to it. So, however, every crisis is also an opportunity, and it also leads to pivot in terms of policies and strategies that governments of the day take. So this actually reinforces a lot of the themes, sectors that we have been talking about over the last 3-4 years, whether it is energy security, energy independence, whether it is supply chain resilience, all these things are coming to the fore even more with every passing event. And it just reminds us every day that we need to be far more self-dependent than really depending on the world. So basically, it's a big world order that is changing. We are going from being a unipolar and a efficient supply chain world to a multipolar and resilience of supply chain is what we are moving towards, just in time to just in case. So yeah, I think that's the nature of the beast as of today.
Yeah, Ravi, in some sense, maybe I don't know whether you preempted that or no, but the recent events from the last 4-5 years have reinforced this thing that every country will have to become self-sufficient in a lot of the domains, right? Energy, defense, space, whatever, all of those. Coincidentally, they are all here. So it's some sense, it's the best of both worlds. But you reckon that increased spends from governments and private players alike will be towards these themes?
No, absolutely. I think you covered it. Energy is not... it's become strategic. Supply chains have become strategic. Bilateral relations have become strategic. So, and somebody can use that as a geopolitical weapon against you. So, absolutely, governments must take steps to become self-reliant.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
Delhi, the greens are ready. The contest, the intensity, the energy. Where the finest pros of golf meet the pros of business. NDTV DP World PGTI Golf Pro App, the course of champions, the conversation of leaders. 21st March, Kotab Golf Course, Delhi.
Alright team, our new order show is ready. Now we need a promo. Something cool.